Alrighty, good afternoon. It's just ticked over midday, and welcome to our webinar for today, which is all about Queensland's new seller disclosure rules when it comes to selling property in Queensland. And I'm joined today by Nathan Donovan from Donovan Winkler Lawyers. Thank you for joining.
Yeah, thanks, Ben.
Awesome. All right. Well, I might just do a brief intro or just sort of run through a couple of things before we get stuck in. And just a heads up, our next webinar is in a couple of weeks, and it's all about estate planning and asset protection. Yeah, we'll be diving deep into that. What are the strategies that we use for, particularly to business owners, when it comes to our approach with estate planning, and also reducing our risk or the risk associated with running our business. And yeah, as you join, feel free to pop your webcam on. It's nice to see faces behind names rather than just feel like I'm talking to a screen. Although I do have a guest in this webinar, so it feels a touch better talking with someone else. But pop your webcams on as you join, and also, please feel free to pop any questions in the chat box. I'll keep a monitor on what we've got going on there, and that we will have some dedicated time for Q&A at the end. If this is your first time joining on one of our webinars, I'll just give a brief introduction. So my name is Ben Walker. I run an accounting firm called Inspire Accountants. We're based in the Fortitude Valley and work with small business owners all around Australia. One of our focuses is on saving our clients a heap of tax. That's one of our specialties. And we've saved our client base over 46 million bucks and counting. And we've just finished our tax planning season in which we saw that counter skyrocket, which is, very cool to see. And then if you do want to have a chat with one of our team about, what it looks like working with us, then you can do that by booking in an initial chat with one of our accounting team. The link, thank you, JB. The link is in the chat box now. And if you did want a copy of the book, It's All Sorted. So the focus on this is to help business owners understand their tax and achieve peace of mind when it comes to that sort of stuff. If you are a client on here today, we can get you a copy sorted at no cost there. But if anyone does want to order that, it is available on the website, and the link has just been posted in the chat box again. Thank you, JB. And then a brief personal introduction. So I started Inspire when I was 23, and I'm an award-winning chartered accountant with 18 years of accounting experience now, and the author of 2 books in the last few years. We've got Wealth for Life, which focuses on strategies for business owners to increase or grow their family wealth, and also the book I mentioned just earlier about the tax side of things, which is called It's All Sorted. And what I have forgotten is to do this spotlight thing, this fancy thing. And I do have joining me today Nathan Donovan, who is the owner and founder of Donovan Winkler Lawyers, Brisbane-based lawyer and a volunteer director and advisor to a number of charities. And a bit of a fun fact, I think I've known Nathan probably since my maybe like 10 or 11 or 12 years old. It's been decades. So great to be able to present this webinar with you, Nathan. And thanks for joining again.
Yeah, thanks, Ben.
All righty. So what are we going to be covering? So again, the whole topic is, what is this new seller disclosures rule? All these rules coming in Friday this week, the 1st of August, 2025. We're going to have a brief overview of the Property Law Act. Then we're going to dive deep into the seller disclosure regime, including whatever a Form 2 is, the practical implications for sellers and advisors. But also I think we'll flip the hat the other way and maybe look, as a buyer, what are we going to expect when we go through that buying process? And we might also have a look at a couple of fringe topics related to our friends at the Office of State Revenue, because and maybe that's one of my first questions, Nathan, is who's the governing body or whoever oversees this part? It wouldn't be the Office of State Revenue for this one?
No, no. This is it'll be overseen by the Office of Fair Trading in a
Ah,
general sense. Yeah. Given that they will be dealing with agents, but look, even then, it's really a department of the Attorney General is responsible for property law matters.
yeah, wow.
So we're really dealing here with really high level changes to the Property Law Act,
Yep.
and it stands for lawyers and for real estate agents to comply.
Mm, okay. Yeah, and indirectly the seller more so the obligation.
Yeah, that's right.
Yeah, awesome. Well, I might hand over to you to walk us through, and yeah, anyone joining, feel free to pop questions in the chat box as we go.
Yeah, sure. Well, look, I've been a lawyer now for a bit over 20 years. So I learned and have always used the 1974 Property Law Act. And it really is one of those critical bits of legislation that deals with how you deal with property, Queensland. And look, it kind of sounds a bit Orwellian, but we need to modernise the the law. And so what has occurred is that the Property Law Act of 1974 will cease to exist at midnight on Thursday.
Wow.
And from there, the new Property Law Act of 2023, I think is actually the year, will start to commence.
Mm,
And look, most of it is just a restatement of what was already there, right? But there are some key changes. So the main one we're here to talk about, and what is actually the real key change, is over what we might call the seller disclosure regime.
mm,
But there are just some other changes, so particularly around some leasing issues. So um, obligations of landlords when you're assigning leases, some benefit with if you are a tenant and you assign a lease, you remain liable typically to the landlord for any breaches by the new tenant. But if there is a further assignment of the lease, you as the initial tenant is now off the hook.
okay, so it's second and third that are on the hook still, or
That's
maybe
right.
second.
Yep.
Yeah. Yep.
And look, without going into it, there's minor changes around easements and a concept of installment contracts, right? Um,
Mm,
but really, we're here to talk about the key change to mandatory disclosure. Yep. So
mm,
um, we can go on to the next slide, Ben. But
yep.
um, look, when I went through law school, it was drummed into me that the abiding principle for property law in Queensland was, and look, they love Latin back then, but caveat emptor, right? Which is let the buyer beware, right? So, in a general sense, what that meant was practically is that if I'm acting for a buyer who's purchasing property, I treat with utmost skepticism anything that the seller has said to me as the buyer, and I
Mm,
need to go and check everything I can about the property. Right. So if I'm acting for a buyer, I typically say to them, look, in a nutshell, my job is to make sure that at the end of the day, on settlement, you get clear title to the property and there aren't any nasty surprises. Yeah.
mm,
And how do I find out if there are nasty surprises? Well, there's no magic involved. I've got to go and make inquiries with titles officers, local councils, government departments, body corporates, and the like. And they issue what we call certificates, which tell me on behalf of a buyer whether there's something that they need to be concerned about.
mm.
And so, really, what is happening in a general sense is that there's a real culture shift happening, right? Because of
Away
the
from
law,
personal, away
uh,
from personal responsibility.
away from personal responsibility, and
Aha.
it's now shifting somewhat to the seller, right?
Mm,
So rather than a buyer or their lawyer having to race off and find out, obtain certificates from government agencies and body corporates, there is a requirement on the seller to now give disclosure before a buyer signs a contract, um, which includes giving a lot of certificates, right? So it's a
mm,
culture change. Now, before we all jump up and down, I think it's fair to make a point that New South Wales has had a form of this sort of seller disclosure since 1986, right?
Wow.
And look, I don't act in New South Wales property transactions, but the few touch points I've had acting for clients that are buying property and having had the chance to look at contracts and disclosure before settlement, it's actually really quite a good system.
Mm,
Particularly if you're a buyer, right? So, and you're a buyer taking legal advice. And why is that? Because automatically I can give advice to a buyer. Hey, I can see this disclosure and very quickly make an assessment whether or not there are some major potential legal impediments to a buyer being able to do with that property that which they want to do, right? So that's not always a big issue, right? If you're buying a residential property and you want to use it as your place of residence,
mm,
like typically you can do it, right? But what if you're buying a property that you want to construct a um, factory on, right? To manufacture goods. Yeah.
mm,
Well, there's a whole lot more that you need to know. So um, getting disclosure before settlement will be dependent upon what you want to use the property for as the buyer.
mm.
Um, but it is going to be a culture shift, right? Um,
Yep. And does that mean are they going to be essentially replacing the searches that you would otherwise provide if you're doing a bit of a thorough assistance for a buyer?
yeah, well, this is going to be an interesting to see what happens in actual practice, right?
Mm,
So, um, culture is pretty slow to change, and the culture has always been that lawyers acting for buyers should be sceptical
yes.
of the information that you've received, and that we may need to verify, right?
Yes.
The other is circumstances change, right? So um, even though we would probably be obtaining information from the exact same sources that the seller is, right? So if I can give you an example,
Mm,
if you're a buyer, you would like to know whether or not the Department of Main Roads and Transport wants to resume your property for public
mm.
road purposes. Yeah.
Yep.
Now, so that is one of the certificates, for example, that a seller now needs to provide. It's a confirmation from the Department of Main Roads as to whether or not there is a resumption plan.
Hmm.
Now, what if that search was dated the 1st of July,
Mm,
2025? It's now the 1st of September, 2025. Could something have changed within that 2-month period?
yeah. Okay.
Right. So that's something
Yep.
that you
And
might
in
consider.
the disclosure rules, is there a time limit or like a timeliness? Like, do these disclosures need to be have within the last 30 days from whenever they're issued? Oh, sorry, maybe another way to say that better is are they valid for only a certain amount of time?
Look, there is at the minute a concept of a 3-month, or what I call a 3-month rule, but it's not
Yeah.
really a 3-month rule, right?
Yep.
Um, if the certificates are more than 3 months old, they're invalid, right? So
Okay.
you, as the seller, will need to go and obtain new certificates. But here's the kicker, right? The kicker is for you as a seller, the information you give in the disclosure, and there's two parts. There's a Form 2 disclosure statement and a pack of certificates from third parties, right?
Yep.
If at the time the buyer signs the disclosure or they're given the disclosure, they are inaccurate, that potentially triggers a right to sell, even if the certificates were accurate at the time they were issued.
Wow. So let's use your example. But say like on the 25th of July, like 4 days ago, main roads there was no plan to resume, and then on the 2nd of August there is, and the buyer sign. So the reports are done on the 25th. The buyer signs on the 3rd, like the day after. We've got risk there,
There is a
as it's
potential risk, yeah. But can
yeah.
we just look, the real world, right? You're pretty unlucky if that happens, right? And
Yes.
so that's an issue even now, right? So if I'm acting for a buyer and I
Mm.
do a main road search on the 25th of July and I'm
Yep.
not settling until the 1st of September, there is always still a window of time when there could be a change.
Mm.
Um,
Yeah.
so that remains an issue, yeah. But the issue will be whether, if I'm acting for buyers, certainly the Queensland Law Society and our insurer is informing us that we need to be pretty belligerent with our clients
Mm.
and recommend that we independently search again, even after receiving disclosure from a seller.
Yeah. Okay.
So
Interesting. Mm.
practice will be whether or not that actually occurs. Yeah.
Yep.
Um,
And it's up to the client to agree to it, I guess.
yeah.
Yeah.
But I mean, a couple of points here, right? So disclosure, right, has to be given now before the buyer signs the contract, right?
Hmm.
Now, this is all from the 1st of August. So we've got a couple of days where this doesn't apply, but from 1 August, bang. Yeah. Now,
Yeah.
it is relevant to consider what is the contract. So the contract is, of course, a contract, right? So most people buying and selling, particularly residential property, but even commercial property in Queensland,
Mm.
use standard form contracts which have been prepared in partnership between the Queensland Law Society and the Real Estate Institute of Queensland. Right?
Yep.
That's
Yep.
not going to change, right? And in fact, there's a new version of the contract that has come into play for use from the 1st of August to reflect these changes. So
Hmm.
that is the contract. But what about a put and call option?
Mm.
So what is a put and call option? It's where a grantor or a seller grants an option to party B, the grantee or the buyer, to enter into a contract at a later date on certain circumstances, right? So what the law is making very clear here, that for the purposes of the Property Law Act and the seller disclosure, the contract is actually the option deed.
Yeah. Okay. Yeah.
All right.
Interesting. Yep.
So I've got a couple at the moment where I've had option deeds signed in the last few months and are
Hmm.
due to be exercised within the next few months. So after 1 August,
Hmm.
that will not be the contract that's created when the option is exercised will not be treated as a contract for the purposes of the Property Law Act.
Okay. So they don't need to comply.
Don't need to comply. That's right.
Yep.
Yeah. Um, Little kicker that you need to be aware of, though, is that for option deeds, it's often now typically developers like option deeds. Yeah.
Hmm.
So it's pretty rare that you'll have standard residential contracts that are in the nature of option deeds. But you'll often have a developer use entity number A as the entity entering into the option deed,
Hmm.
but it has a right to nominate um, entity B to be the ultimate buyer of the property when a contract's formed,
Okay.
right? So in that case, you've got a different buyer to the party that entered into the option deed who's actually going to enter a contract. That would be a case where you would need to do, if you're the seller, fresh disclosure under the Property Law Act because the buyer entities
Uh,
are different.
okay. So even we're saying that even if the option deed is signed in August or later, we still need, as the seller, you'd still need to be aware to do two disclosures.
Only if
Mm.
the buyer entity changes.
Yep. Yeah. Okay. Interesting.
Yeah.
Yeah.
But there are some types of documents or contracts that aren't treated as contracts for the Property Law Act. So if you're selling leasehold property, so
Hmm.
crown leases, it's fairly common for farming property. It'll be leasehold.
Hmm.
Off the plan contracts. So if you're buying an off the plan land or off the plan unit, they have their own disclosure regimes and they're not covered by this.
Okay.
And if you're also gifting property, that won't be covered.
Yeah.
Also, some transfers between relatives
Are excluded.
are excluded, and the government's written itself out of the deal, right? So if you're buying or selling from or to a government body or council, disclosure is not required.
Right. Cool.
And of course, what is the there's a stick and a carrot here. What's the carrot, or the carrot, or the stick rather? Well, the stick is that if you as a seller get it wrong, you potentially give your buyer a right to terminate the contract.
Yep. And who would, so let's say you're a seller, who would ordinarily be putting this together? Would it be part real estate, part lawyer on the seller's end? Or
Well, again, we've got to work this out, right? So we don't really know. Lawyers and agents are both putting their hands up. We can do it, right?
Right.
Now, clearly, as a lawyer, we can, right? We're lawyers, we give legal advice, yeah? And I
Yep.
can make it clear we're insured if we get it wrong,
Mm.
yeah? Look, what I'm aware of, is that agents are communicating to buyers that to sellers that they can do it. They have an arrangement, I understand, with a third-party service provider to package up disclosure statements and these certificates.
Got it. I see.
And look, I think history says that quite often, whilst any buyer or seller that I act for, I would plead, it might be too strong a word, but I strongly recommend that we get a chance to review a contract before it's signed.
Oh, for sure. Yeah.
Right. But it is very, very common that the first time I know about a deal is that I've got a fully signed contract on my desk. And that's because agents are preparing contracts, right? So I suspect that will occur.
Okay.
And we'll pick up the pieces when there's mistakes.
Got it. Okay. So yeah, okay. But you're expecting that the real estate agents will have some sort of relationship with someone who can provide that service
Well, it
on
won't be
some.
a lawyer. It'll
Yeah.
be a third-party service provider, which I suspect is doing. I mean, the main thing I think they will be doing is ordering the required prescribed certificates from third-party providers.
Yep.
I'm not sure how they'll be going about preparing Form 2, which we'll talk about in a moment.
Yep.
But you do need to know that there is, look, it's not as simple as if you get it wrong, definitely there will be a right to terminate, right? There's a bit of nuance, but I think that's what you need to hear, right? If you get it wrong, they may potentially have a right to terminate.
Yep. Yeah, cool.
And perhaps going to your point, well, no, this is a little bit of a different point. So you queried what happens if there was a change in circumstances, right? On the 25th of July, there was no plan to resume. On the 1st of August, there was. Now, there is some provision that if the service provider delivering the information gets it wrong, it's inaccurate. Now, what occurs there is that potentially the buyer still has a right to terminate.
Yep.
But the law limits their right to terminate. There is then no right to seek compensation from the seller for getting it wrong because the seller themselves relied upon inaccurate information.
Yeah. Okay. Yep. And that would just be unfortunate, that scenario.
It would be. But again,
Yeah.
that doesn't avoid the right of a buyer to terminate.
Yep. Yeah, cool.
All right, maybe it's worth moving on. So what's in this Form 2 statement?
Yep.
So, the key obligations then, said there's prescribed certificates and notices. So if we go to the next slide, Ben.
Yep. Can you that one there, the form 2?
Yeah. So
Yep.
what it is, I think it's about a 7-page document at the moment, right? That can change. Prescribed meaning the government gets to change it at will. Yeah. Now, it's a single disclosure statement that applies to vacant land, residential land, commercial, industrial property.
Sorry, mate. I think I accidentally muted you.
No, all good. It also applies to body corporate, so community titles, and there's also a unusual type of body corporate structure in Queensland. The abbreviation is BUGTA, but let's not worry. Yeah. So in a general sense, you've got to disclose the details of the seller. But here's probably the kicker, right? You've got to disclose title details, encumbrances, and residential tenancies. But encumbrances include not only encumbrances that are registered on a title deed, kept with the titles office, it will include unregistered encumbrances and what are known as statutory encumbrances. Right? So you're looking perplexed.
Yeah, I have no idea what that is.
Well, so an unregistered encumbrance is just that, right? It's something that affects you're a seller, your ownership or title to the land, but it's not actually appearing on a title deed. So that can include things like an unregistered lease, anything created writing or orally, right? So sometimes you will, particularly if you're a business owner and you've got a credit account with a supplier, I sometimes see dodgy suppliers, including one, a personal guarantee by the director, but two, including what you might call an equitable mortgage over land. So not only does the director say, yes, I'm agreeing to personally guarantee the account, I also agree that I will charge or mortgage my property as security for this account.
Goodness.
Right? So that's something that would need to be disclosed.
Yep.
Right? You might give an oral easement to a neighbour. Yeah, mate, you've got the right to use my driveway.
Yep.
And a statutory encumbrance. So probably the two categories are, so one's a statutory charge. So if you don't pay your rates, you don't pay your land tax, what automatically occurs is that there's a statutory charge that will appear over your property. So ultimately what that means that the Queensland Revenue Office or the local council can seize your property, sell it, and recoup their unpaid taxes or levies. And that's the statutory encumbrance.
I've seen a lot of that out west. Is it pretty common with like rural properties? That sort of thing happening, or?
Look, it happens to all types of properties, but I think it's fair to say that a lot of farmers are pretty cash poor. Yeah, so the fact that they might get into arrears is probably a bit more common than the general public.
Got it. Okay. Yeah.
But also the fact that you've got council sewerage lines, water drainage running underneath your property, that is actually a statutory encumbrance. Why? Because there are statutory rights that council then have to come onto your property to dig up, maintain, repair that underground infrastructure.
Yep.
Right? And these are all matters that need to be disclosed
in
a Form 2. Other matters, you've got to disclose land use, so zoning. When it comes to buildings and structures, whether or not you've got a swimming pool, so there are different certificates or notices that need to be given. Now, if you've ever done any work as an owner-builder on the property, you've got to give statutory notices to a buyer, effectively warning them that the work is not insured. Also what are called property notices, so show cause or enforcement notices. So you go and build a lovely big shed on the back of your property, but never got council approval. One day
Yeah.
council could knock on your door and go, here's a show cause notice. You didn't get approval for that shed. We think you need to tear it down.
Yep.
But what you don't need to do is give disclosure of approvals and certificates for those additions or improvements on your property. Right. So if you've got a shed that wasn't council approved, you don't need to give any disclosure unless council have actually issued that show cause or enforcement notice.
Got it.
And then there's rates and water information and a bunch of information about body corporates. Yeah. So if we move on to the next slide, we need to talk about, so that's about your Form 2 disclosure statement. From there, you've got a list of the prescribed certificates, right? So every sale will require a title search and registered plan. Yeah.
Which is normal. Like if you're buying, and I mean, you've done that stuff for me. That's really common to do as a buyer at the moment.
That's right. So the very first thing, if certain scenarios occurred where, look, the truth is, if I get a draft contract, I will do that as a matter of course before anyone signs the contract, because it is just threshold information.
Yes. Yeah.
And then from there, there's a bunch of other certificates that are required only if relevant, right? So what I expect, though, to occur is that as a matter of course, so for example, I gave the example earlier of a resumption plan, right? So there's a search I can do, or any lawyer or person can do with Department of Transport and Main Roads. So if there is no plan of resumption, you don't need to give the certificate, but it's a bit of the horse in the carriage. How do you know whether or not there's a resumption plan, or how can you be absolutely sure without actually doing search? So I expect that you'll just end up doing a raft of standard searches. And if it shows that there's no issue, I think most sellers will give that search to a buyer anyway. Yeah.
For sure. Yep.
Worth just focusing, just making a comment around body corporates. So there is a new called Form 33 or Form 34 for body corporates that must be given as part of this pack of prescribed certificates, right? So if we're thinking about you being a seller and having to be proactive, not only will you need to get a raft of ordinary certificates from government agencies and local councils, there is a further and a new form that needs to be provided from your body corporate. And at the moment, they have a statutory window of 6 days to get that certificate to you. But they're jumping up and down and going, this is all brand new. We're getting paid a pittance for it. We're not sure we will in fact be able to meet that deadline.
Okay. And because there's a lot of the bigger apartment blocks and that sort of thing have professional body corporate managers, but is that more relevant for because you don't need to appoint a manager per se. You can just do it yourself essentially, or with a small group of people. And that's who's going to have to respond to these things.
Yeah, look, I've got to say my experience is that even for very small schemes, most have a manager.
Okay.
Yeah?
Yep.
Particularly, you've got what's called 2-lot schemes, right? So where you've only got 2 lots. Again, rarely would they have a manager. So my take would be that most sellers will, if they're selling a property with a body corporate involved, will have a manager. Yeah.
Yeah. Yep.
But if there is no manager, it falls on the committee, and particularly the secretary, to compile this document.
Okay. Yeah, wow. Next one here.
next one, yes. So question is when and how to disclose. So again, the key is before the buyer signs a contract, right?
Yep.
So it's not good enough if the buyer signs a contract and you go, oh, whoops, we didn't give the full disclosure. He will give it now, and then as a seller, we'll sign the contract. You would need to give the disclosure and have the buyer sign a new contract.
Okay. And could you, like, let's imagine you're sending it through DocuSign, even though let's use Anacha, which is the nicer version of it. Could you put the disclosures at the start and then the contract to follow? Or, yeah, like practically, how are we going to start seeing these things?
Look, I think that is what will occur.
Yep.
My read of the law is that would be permissible,
Yes. Okay.
right? Because they have been issued before the
Yes.
buyer signs. Yeah. Um, but do I think that that's a sort of issue where it could one day be litigated by a seller who really wants out? I wouldn't be surprised. Yeah.
Okay.
So, look, when I first started legal practice in the 2000s, there was big changes to the property regime with cooling off periods and what were called warning statements under what was called the PAMDA legislation. And what I think you found there is that at certain points in time, there was litigation that occurred. I mean, that was one where there were very silly requirements where warning statements had to be physically affixed to a contract by staple. So you couldn't sign a contract by fax. This was back when we still had faxes, yeah, or email. So you had very weird cases where developers prepared contracts, issued them, but then had the ability to terminate because they didn't affix a warning statement by staple. And there were whole court cases about stapling
Wow.
contracts.
That's
So,
silly.
so there is certainly the law does give in the Property Law Act the ability to give disclosure documents electronically, right? And including by electronic link, right? So to your point about DocuSign or Anacha. Where I think it probably will, it's have you received consent from a buyer to issue them electronically? I think there might be a few cases on that point. Also, if you do give it by post, again, be rare that would occur, but every now and then you get an older buyer, doesn't have internet or email, and you need to post documents to them. Well, delivery is deemed 7 days after posting, or 7 business days to be clear. So it could really make contracting slow right down in that case. Auctions is probably an interesting one. So how do you give disclosure in an auction situation? Now, if you've got registered bidders, it's probably fairly simple. If they register, you get the disclosure pack.
Yes.
But what about unregistered bidders? So the law has considered that point. And if it's a physical auction, as long as you've got, now, this is a general comment, you need to look at the law more carefully. But in a general sense, as long as you've got copies of the documents on physical display at the auction venue, you'll be okay if there's an unregistered bidder that ultimately is successful. Because the contract is deemed to be signed on the fall of a hammer in an auction. Now, if it's an electronic auction, again, you can use electronic copies of documents or links in, well, electronic links to the documents, but you have to use the same electronic medium used to conduct the auction. Is the language used in the law.
It's like if it's I've never been to one online, but so like a Zoom link, you put a link in the chat for
I
your
think so.
disclosures.
Yeah.
Yeah.
Again, I'm like you. I haven't done an online auction before, but that's the way the law's worded here.
Yep. Yeah. Cool.
So if we move on, what are some of the practical tips? Yeah. So I really do think you want to engage your solicitor before you go to market if you're a seller. Yeah.
Hmm.
And be prepared, right? So um, probably 2 weeks before you're ready to go to market, you've
Mm.
engaged a lawyer. That will probably give enough time to collect all the information and package together the form too.
Yep.
Um, the I think the reality is that the real estate agents will, whether we as lawyers want them to or not, will do it. Yeah. So where I think, um, why would I recommend a lawyer? Well, one, we're insured for giving advice. Two, I think it's particularly around these concepts of unregistered encumbrances and statutory charges.
Mm.
Also option deeds, if you're dealing with those, um, that I think it really does warrant legal advice that agents really, I think, will struggle to give,
Mm.
right? Um, and again, going back to what I called PAMDA, um, it, that law came in 2000, 2001. It was sort of 2003, 2004 before the cases actually started properly hitting the courts and being determined.
Yep.
So I don't expect that we'll have decisions straight away from courts going, aha, here's how you get it right or here's how you get it wrong. It'll take a little bit of time. And I think it'll also be market based. So there I found agents were, well, sorry, the court cases came in a context where the market was either pretty stagnant and slow, taking a
Mm.
long time for properties to sell. Um, and so there was a bit of an incentive to sellers to try and get out of deals, right? That's probably not quite the market at the moment.
Yeah. No. Yeah.
Property, if contract one falls over, there's typically a buyer lined up ready to go. Yeah.
Yep.
And it's kind of no harm, no foul for a seller. But that's not always how the market acts. And
Mm.
when things turn a bit more ugly, well, the incentive to try and get out of deals will increase.
Mm. Mm.
Um,
Interesting. Yeah. Even I've heard of, a seller gets another offer after the contract's on for 50 grand more, although they're stuck in the first one. Um, even in a hot market, I see that that could happen as well. That the seller wants to get out and get another 50 grand.
well, this is about whether a buyer can get out, is the key
Oh,
thing,
oh,
right?
okay. So it doesn't
So
give a seller the right these
seller,
things.
seller don't know because it's the
Mm.
obligation of the seller to give the disclosure,
Got it.
right? And so it's really about buyers who get out, right? And on a
Mm.
hot market with limited stock, buyers typically don't want to get out. Yeah.
Yes. Okay. Yep. Yeah, for sure.
But if
Okay.
market forces changes, yeah. Um,
Yeah. Cool. Uh,
I'm not sure if there are any questions around that. I mean, I'll have a couple little comments on some fringe issues in a second if you'd like, Ben, and there was time.
yeah. Yeah. We got a few more minutes. I think that's all good.
Yeah, so changes to body corporate obligations. So I did mention that. So they have a statute. The body corporates have a 6-day window to issue what's called the Form 34 or the Form 35. So just from a timing perspective, you need to be aware of that. Um, Now, importance of record keeping. Now, I mean, there's probably comments there for you, Ben, but from looking at it purely from this seller regime perspective, um, it's all well and good when you've got a registered encumbrance on a title, right? I do a title search and I can see what's on title and it can be simply disclosed.
Mm.
But where you've got unregistered leases or um, informal easements and the like
What
that are
about an
not on title,
undocumented adjustment?
absolutely. Yeah,
Yeah. Yep.
right.
Mm.
And I think that's going to be, I mean, adjustment's probably a good one, right? Is that actually an unregistered lease
Mm.
or is it a mere license to use property? Look, I think this is all the fun that lawyers are going to have in the next few years. in working through those issues. Yeah. But
Yeah.
it's having the records so that they can be disclosed,
Yep.
right? And
Mm.
that's not even dealing with all of your tax compliance issues and record keeping that you'll need to maintain for when you come and sell a property, 7 or 8 years later, or however long
Mm.
it might be.
Yeah.
Also, just completely unrelated, but dealing with Queensland property, look, land tax is becoming far more common issue for me to advise on, is the
Mm.
reality. And why is that? Because property prices keep going up. Yeah,
And the
and
thresholds don't.
the thresholds don't. Yeah,
Oh.
so
Mm.
it is just worth being really proactive particularly if you're a buyer of property, that you're thinking carefully and taking some good tax, accounting, and legal advice before buying property.
Mm.
Um, and that's because, again, the comment I'm getting now is, oh, this land tax bill, this is a major gut punch,
Yeah.
right? And so understanding how land tax works, right? So it's levied at midnight on 30 June each year, yeah,
Mm.
for the year forward. So it's tax collected or payable in advance for the year ahead.
Mm.
So it doesn't matter if you sell the property on the 15th of July, you're paying land tax for the whole year. Thank you very much on that property.
Mm.
Um, but it's in relation to a taxpayer's land holdings above thresholds, right? So the taxpayer could be an individual, could be a company, could be a trust, generally speaking, right? Now, you look at the total land holdings for that taxpayer. So typically you'll exclude the principal place of residence, right? But even that, there's some bizarro rules if it comes to you vacating your property to undertake major renovations or demolition. You've
What?
effectively got a 6-month window to get back in the home, or you'll be
Oh,
paying land tax.
wow.
But if you're an individual, that 600 grand threshold, effectively of investment property before you start paying land tax. But for companies and trusts, that threshold is 350,000, a lot lower. Yeah.
Mm.
So just consider an example. If you're a couple and you own property 50-50, you've got effectively 1.2 million between you before you start paying land tax on your investment properties. But
Mm.
that's if you buy in a trust, that's 350,000 before you start paying land tax. So what you need to be aware of is there's all well and good to buy it in your own name, but how's that going to go for asset protection?
Yeah.
Um, but the real benefit is there's currently very limited aggregation, right? So if you buy property number one in AB Trust, whatever you want to call it, and then you buy property number two in XY Trust,
Mm.
even though those trusts are effectively pretty similar garden variety family discretionary trusts, each trust will be considered as distinct taxpayers. Right?
Mm.
So you do the cost benefit analysis of the compliance cost of having multiple trusts against how much land tax you think you're going to pay.
Yeah, or saved by having it, which is really the
Exactly.
threshold amount, the 350K.
That's right.
Yeah.
Um,
And what do we
so
need? Mm. What do we need to do to get those thresholds increased? Same thing with the payroll tax threshold that hasn't
oh
gone up recently for a while.
well, I think it's one cynic to another. Good luck.
Yeah, is it riot level? Is it what we need to do? Uh,
Yeah, I think state government's drunk on easy tax collection. Yeah, and I mean, most economists would say land taxes are actually the most efficient tax available because it's so easy to collect the tax. You don't pay it. Let's come back to seller disclosure regime. You don't pay it. Well, that now is a charge against your property,
mm,
and the government can step in and sell the property to pay the tax.
Yeah, yeah. Incredible. Hey, it's yeah, but particularly on the thresholds not increasing, and that applies to plenty of things, even the tax tables. I know they are increasing, but definitely not to the same speed as
No.
in inflation. So really tax is going up indirectly. Um, yeah, I mean we're not necessarily here to talk about that, but it's definitely um, an interesting situation. And you must imagine the state government must have so much extra cash because the amount of the land values have gone up, which means land tax has gone up. The property prices and the stamp duty
The
that's
stamp duty.
collected on those will have skyrocketed as well. And my gut feel, this isn't tested, and surely there's a stat out there. The frequency of so how often a property is sold would also impact the total revenue the OSR receives. Is it QRO? Is that the
You
new
are right
one?
now. Yes.
All right. Yeah. Okay. So in the Queensland Revenue Office. So even those three things, all property related, must mean that our state should be doing all right. But who knows what they're spending it on? They're probably spending it faster. On anyway,
And that's not even mentioning payroll tax, which is probably the worst of them all.
that's feral and it doesn't make sense. But
Yeah.
ah dear. Anyway, maybe another webinar. Very good. Okay. Well, I think that was all the content we had to cover. Yeah, there's a few people online. If you've got a question, please pop that in the chat box. Yeah, so while we wait for any questions, if there are any, just another reminder that if you do want to have a chat with one of our accounting team, feel free to book in for a call through our website with one of our accountants. And Also, what we might do is just, if anyone does want to reach out to Nathan, I'll just pop the website in the chat box as well, if you do want to, or if if you're a client and you're watching this, just reach out to the accountant that you work with at Inspire, and we can introduce you to Nathan. We do a lot of work with him personally, but also mutual clients. And thanks, Adrienne. Appreciate that. Thank you. But yeah, I hope you've enjoyed it. If you've been watching, thanks, Sue. Yeah, again, really appreciate you spending time with me and also our audience.
Yeah.
Awesome.
Thanks a lot.
And thanks very much, Nathan. Cheers.
No worries. Cheers. Bye now.
Bye.